Hey, good evening traders. It's 9:30. Yes, we've had FOMC. The markets have moved. They've come back a little bit. What do we expect and what are we forecasting? Well, look, end of the day, I'm still sticking with what I believe in terms of seasonality. Seasonality, April is the second worst performing month of the year for the US dollar. It's the most profitable month of the year on seasonal patterns for sterling. And we usually see a little bit of a flourish for euro, obviously, as it's inverted to the US dollar. What have we seen so far? Well, something to look out for. Yes, we've broken out of these highs. But if we just take a look at a simple little indicator here, which is your MACD, just looking at the histogram. Histogram is the difference between the moving averages. So as the moving averages separate and the trend gets stronger, the histogram gets longer. It's the distance, the gap between the two moving averages. So in theory, as the trend moves higher, the moving averages should be moving higher. And what we look at in terms of divergence is that if we have created a new high, then in theory the moving averages should have been separating further, and if they're not, then this is divergence. It means the momentum is moving out of the market. If you'd like me to do a webinar on divergence in the future or a video, please just comment below. Do a webinar on divergence so I can understand it more, and I'll be happy to do so. But how does it play out and what can we look for? Well, look, here's a couple of keys for pointers for you to look out for and how it worked in the past. So just looking at from peak to peak, we can see the market created a new high. If we look down at the histogram, we can see the market or the histogram created a lower high, and that resulted in a corrective move on the US dollar before it then started its next impulsive move higher. If we go a little bit further back, we can see from peak to peak we've got a new high, and if we look at the histogram, we've got a lower high, and that resulted in a corrective move. Now, what do you notice about the most recent move after it's broken out of its near-term resistance level? We've got a new high in price. We have a lower high in, oh sorry, that didn't click there. We have a lower high in our histogram, meaning that there is divergence on show at present. The move up is getting weaker. So how can we look at trading this? I'm forecasting a corrective move on the US dollar, and therefore that would mean looking at going long on euro or long on pound, or predominantly those two. They'll be the ones that I focus on. I'm not going to look at long on Kiwi or long on Aussie. They're risk currencies, and we'll talk about those a little bit later. But they're also, we look at Aussie, that it's not in the basket of the dollar index. So focusing primarily on euro and cable. So if we look here, 99.3 is a key structural point on the dollar index. If we go to the euro dollar, we've got a long-term trend line that the market has been respecting, and we've pulled back down pretty much close to the lows where we forecasted the reversal last time. Let's just remove our histogram, and just so you can see, here we go, we've got one, two very clean touches, third clean touch. The market rallied up into 1.12, and we've seen a corrective move lower. Now, just looking at how we can then potentially get long the euro should we see this dollar corrective move come in. Well, it's quite clear. We've got a couple of little levels that we can work to and from. So the first one I'm looking at is this double bottom that is potentially being formed. So I'll be looking to take a trade quite aggressively tomorrow. Should we break above 1.0940 is the area I'll be looking to get long. Should we get above here, I'll be looking to get long euro, trade it up into this area, take a little bit of profit off the table to de-risk, and then as soon as we can get above 1.1, I'll be looking to ride that little beauty higher up to 1.11 into this structural point here. If we get any higher, fantastic. We'll look forward to continuing to take those trades higher, and pound will be looking to do something similar, but we've got a few barriers in the way of pound. You can see, you know, we've been looking to trade it a couple of times long. We caught a nice move initially, but then it kept failing at 131.60. Now you could be aggressive and look to trade somewhere down here. If you can see a nice change of cycle, maybe tomorrow's daily pivot might be something to be looking at to get long. Or intraday, you've got above 131. If we get above 131, you can be quite aggressive, but you've just got to bear in mind that 131.40, 131.60, the market has been sticking. So ideally, you can see I've got an alert set here where this orange arrow is. We get above 132, then I can see we could have a decent rally at least until the end of April, maybe the first week of May, hopefully pushing up towards 134.50s, maybe 135s, and that would go in conjunction with our seasonal analysis. Now, whether we break out of this higher time frame flag pattern or we're going to start to see the market reverse off that 134, 135 area is yet to be seen. I mean, first of all, we've got to start breaking higher, so don't take anything for granted that just because I'm saying, oh, I'm looking for longs here, that we're going to break long. It doesn't necessarily work that way, and I'm sure those of you that have been in the industry long enough will realize you can forecast all you like, but the market still has to give you the opportunity according to your rules to enter the market. So you can see the bull flag on the higher time frame. Will we break out of this and push back up towards 142s? Who knows? Like I said, we've got to get above 132 in order to get towards 133, 134.50. Now, hopefully, those of you that watched the yen videos that I did a couple of days ago might have been able to take a nice trading opportunity through this little area here. And you know, they did present it on Aussie yen, CAD yen, Kiwi yen, but you know, there was a couple of things that we traded through here that has made decent returns. But what we did say to any of our traders was, be aware of the markets, i.e. indexes, hitting particular price points. So the Nasdaq, we said 14.4, the S&P was 4.4. The Nasdaq came right into 14.4 and bounced, and it correlated perfectly with this swing high over here, and we saw a bounce in Aussie yen. Now we could rally back up into this area before we see a sell-off, or if the indexes are going to go turbo again, expect to see Aussie yen start pushing higher. So we traded this retest in here. So we had the rising wedge, it broke out, it came back up, it retested in this area. We had our stops above market structure. We got close to being stopped out, and then we hit first targets today, and we had another sell which was based on a 4-hour sell stop underneath the blue range here, and that went on to first targets. Now we did send out another message just to our members to basically say, look, the indexes hit our price points, we're closing another half of the position out, so we've only got a quarter of the position still running, and we're going to manage that accordingly. So that's obviously the three main markets we're looking at. Let's take a look at the Nasdaq and highlight the price points that we were focusing on and what could potentially happen. So it's a really clear structural play, this. You know, when I did the video on the yen pairs the other day, I highlighted that price could potentially run up here, and we usually see an ABCD correction back into structure, which correlated with the 38.2 retracement and our previous swing high just over here. So as ABCD is this kind of movement here, it's a measured move and we're looking for completion in and around this area, and we highlighted that 14.4 would be our pricing point for buyers to potentially step in. That they did, but how can we look to potentially take advantage of the next move? Well, it's all got a little bit messy down here right now. We did tag 14.4 and about a few points lower, but I think now if you look at sort of 14.6 to 14.650, this area here, we get above this tomorrow, then there's going to be a nice opportunity to get long and trade that back up towards the 15.2s. Should price come back down into around the 14.4s, then I'm probably going to think that we may see another move lower. I would like to think that if price is going to hold, it's going to hold from where we currently sit, and it doesn't test the lows again. But you know, we will see. I'm going to get long if we get above 14.650, and if we break down through 14.3, I'll be looking at 14.4s for more downside. Will I short it? No, I'll look for long opportunities from 13.8. I've got my alert set in here. I'm ready, waiting for the market to give us a change in cycle, looking for some structure to get long. So that's obviously how we're going to look at trading the indexes, euro, looking at cable. Also spoke about Aussie yen, CAD yen. You'll have to go back to the video from 2 days ago and just look at where it was, where we the title of the video was buy yen. Is it time to buy yen pairs? And the reason for that was obviously we were looking at yields, looking at indexes, and that potential shift in value, moving out of risk assets into safe havens. So have a look at that video, check it out. And last but not least, Bitcoin. Time to sell? Well, those of you that have been watching videos in our crypto channel on Telegram, I've not been posting much in the crypto channel because crypto has been very boring. Not a lot. I'm not interested in crypto unless we see some more downside, to tell you the truth. Something we're looking at is, oh, 1 second, there we go, it's changed color for the thumbnail. I'm just gonna have to bring these back in. So when there we go, just change the color back. So we took a short on Bitcoin last week using this candle formation here with first take profits in this blue zone. The market came back up, stopped us out at break even on the second position, and I said then that I'd be looking for more shorts once we get below this zone here. We've got below it. I want to see us close below it. If we do, I'll be looking at trading this short from in and around the 44,500 area. I just want to see price come back up in here and start to roll over. I would expect that we get down in towards that 39,000, 38,000, in and around these lows, and then it's at this point, do we get that next flush lower down towards 30,000? It is a bear flag, should result in more downside, but you know, we could operate in this sideways moving market for some time where it does this kind of thing, but you know, obviously time will tell. So we are looking for more downside. It's currently testing the monthly pivot, which could see a little bit of buyers step in, and in all honesty, I want to see more downside, because if we see Bitcoin flush out a load of leverage positions, and what it should do, if we have that nice big drop, it should attract in some more buyers, and then as the market starts to rally and we get new buyers, intake of buyers, we start to see the profits of those buyers start to filter through into those altcoins, and then we get more movement there. So I think we're going to see another, maybe not a landslide move in Bitcoin or the altcoins, but definitely a further move south. Well, that's it from myself, Mark. Today you'll be hosted by Nolan tomorrow. If you did enjoy the content, please give us a thumbs up. Make sure you subscribe to our videos, because that means they'll come direct to your inbox, so you don't have to go searching for any of our latest publications. So guys, thanks ever so much. We'll see you tomorrow. Have a great night, and stay disciplined.